Bad news is good news. That's the paradox that sent global markets soaring last week, even as the US government shut down and job losses piled up. Wait, how can stocks rise when the economy looks like it's slowing? Let's break down the truth behind this upside-down rally. Here's the key. Investors are betting that weak data will force the Federal Reserve to cut rates. The US lost 32,000 private sector jobs, missing expectations by a mile. And instead of panicking, traders cheered. Why? Because lower growth means easier money. Liquidity beats logic, at least for now. Across the globe, markets danced to the same tune. In Europe, the Stoxx 600 hit record highs, not because the economy is booming, but because investors expect the Fed's liquidity wave to lift all boats. Inflation is sticky, unemployment is up, but optimism wins. In Japan, bond yields jumped to 1.67% as the central bank hints at its first rate hike in years. The yen's rising, tech stocks are volatile, and everyone's bracing for the end of zero rates. Meanwhile, China's Golden Week, 8 days of travel and spending, has become the ultimate stress test for consumer confidence. Will shoppers save the economy or expose how fragile it really is? And look at this split. Oil crashed 7% after OPEC Plus said it'll pump more. Gold hit new records above $3,900 as investors ran for safety. Copper jumped 7%, signaling belief in industrial resilience. Bitcoin soared 11% because apparently, risk is back on. The message, fear and greed are dancing, in perfect contradiction. But this rally is walking a tightrope. 5 risks could flip the mood fast. 1, a hawkish Fed after the data blackout. 2, a deeper oil slump. 3, weak European growth data. 4, disappointing Chinese spending. 5, rising Japanese yields. All it takes is one surprise to turn euphoria into a sell-off. So, will bad news is good news survive another week? If you want real analysis, not recycled headlines, like, share, and subscribe. Stay ahead of the markets, because understanding the noise is how you turn volatility into opportunity.